Pence Capital Management CIO. Dryden, always good to see you and have you on the show. So listen, we were just talking there. We got a lot of headlines today, Dryden. I got geopolitical headlines. I got new, fresh tariff threat headlines. What are you making of all? What are you telling your clients?
Well, the first thing I try to tell people is that we're more interested in bottom lines than we are headlines, because as you all just talked about, the headline can change from morning to night and move the market. But what we're really trying to look for is long-term, earnings growth, long-term delivery of profitability for clients and wealth creation. So as I say many times, I'm more interested in bottom lines than I am in headlines. And while they can create volatility, they don't always create wealth. And that's what we really want to try to focus on.
Dryden, I guess the problem now is the headlines are affecting the bottom lines, or they're starting to, right? Because now we've heard from everything from Walmart to the airlines now to Verizon talking about a softening consumer. Now, whether that softening consumer is because of they're watching the news or because there's underlying stuff going on in the economy, regardless, we are seeing more companies warn because of some of these concerns. So what do you do with that, I guess?
Sure. Well, part of this is you almost call it the tariff tantrum. People are worried about tariffs. It creates uncertainty. And then you have companies and CFOs, they really don't know what the long-term prognosis is going to be. And I think that level of uncertainty does work its way into companies' own projections. But I mean, if you think about it, earnings are still good. 75% of the companies are beating earnings. It looks like there's only been a minor revision in what the earnings for the S&P 500 are for the entire year. So I think that there's sometimes this concern, at least to us, seems a bit overblown, but it is beginning to affect people. But I think it's very important to remember that while you worry about the tariff talk and you worry about all these things, 4 out of 5 jobs in the United States are really service related. 2/3 of the economy really doesn't have much to do with international trades. And so it's not a one-to-one relationship between the tariffs and how it ends up with the individual consumer or individual prices. So we probably are at risk of overreacting at a time like this. And I think that that's an important thing for everybody to remember. And besides that, this is now, these conversations begin to be a catalyst for something that's a normal occurrence. The S&P 500 goes down around 10% every 13 months or so. Well, now we're at month 17, so we were due for a significant pullback, and we've had it, right? So now we've had this correction. You're seeing this little bounce off of this. This is kind of the normal battle rhythm of the markets. This one's different, though, because as we were concentrated on the Magnificent Seven going up, we're somewhat concentrated on the Magnificent Seven going down. If you look at the equal weight, or the 493, we've talked about this before, they're doing reasonably well in this environment. Obviously, today is a little different because the bounce is led by who's been hurt the most. But if you look at so far this year, if you look at the S&P 500, the equal weight is flat or very close to flat, whereas the cap weighted is down 4 or 5%, or is now down almost 10%. So you're seeing this better performance in the 493. A lot of this was leveraged to the Mag 7, and I think it's a matter of waiting for this to balance out.
So given that broad view, Dryden, when you sound relatively constructive, would your view be then, listen, if there's a sell-off, that's an opportunity?
Absolutely. I think you want to take advantage of volatility, not be its victim. I think if you really focus on earnings and you focus on fundamentals, you can see this headline overreaction to many things is really just giving opportunities. It's like that Kipling poem, right? If you can keep your head when everybody around there is losing theirs, I think that makes a good sense here.
And so what have you been adding to as this sell-off's been going on, Dryden?
Sure. One of the things that we've looked at is infrastructure. Infrastructure got really hurt because everyone was worried about what was DOGE going to do? Are we going to have big cuts in federal spending and things like this? And while the government is going to cut back on some inefficient spending in infrastructure, they're going to continue on roads and bridges and things that have a positive multiple that are efficient. So we looked at companies that have been severely beaten down by, we think, this overreaction. And so if you think about a couple of them, you've got United Rentals, you've got Jacobs Solutions, and you've got AECOM. All of them are really tied to repairing roads and bridges in this country, and that's something that we have to do. Congress has already authorized over $500 billion to spend this. We need about $1.2 trillion going forward, but these investments are things that help propel our economy forward, and those are things that we're going to continue to spend on. And besides that, Jacobs and AECOM have contracts with Ukraine. We just have word of a truce coming out, so they're going to have to rebuild that country as it comes. So you're looking at those three entities that are really kind of right in what I call the choke point. You pretty much have to use those companies if you're going to do a lot of road and bridge repair, and we have to do that in this country, and it's one of those things that we're going to continue to spend money on, and it's already been allocated. So I think that you have a lot of long-term profitability in those companies. They've been beat down. I mean, they've really been beaten down, and more of an emotional thing, but their PE ratios are pretty decent, and we think the long-term prognosis for those three companies going forward is good. So this is one of those moments where you kind of look at them and say, am I a long-term investor, and is this an opportunity created by volatility as opposed to something that I want to be victimized from?
Dryden, thanks so much. Good to see you.
Absolutely. Thank you. Great to see you all.